Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is Tuesday. It is the 6th of August. A little bit of a bounce back in the market, gapping up on the open. Really didn't do too much the last hour and a half of the day or so. Started to see a little bit of upward movement. Not a lot of folks getting too excited about buying, at least today after yesterday's fairly dramatic sell-off. Of course, on the earnings front, we are relatively light, but Disney, big name reporting here this today after the market closes, and it was a pretty big miss, at least at first glance, coming in at $1.35 a share on EPS versus the expected of $1.75. So pretty big miss on the EPS. Revenue came in a little bit light as well. Didn't really have a chance, of course, to dive in to the to the actual report, but not a beat. I think we can say that, a pretty big miss on the EPS front. We do have around a dozen companies this evening from the S&P, FleetCor, MChip, Pioneer. Just a handful tomorrow as well. I believe 4 S&P companies. Big name out there would be CVS. So fairly light on the earnings side of things here going into tomorrow, but definitely going to be interesting to see the response to Disney. At first glance, it was trading down around 3 or 4% in the early after hours, right after announcing those earnings. So on the S&P, all of the indexes pretty much. You guys know the drill. This is kind of what happens. Everything kind of moves in conjunction at the beginning, right? When we see these big shakeouts or whatever we want to call them. We did gap up on the open on the S&P. Futures were down yesterday afternoon after market closed, but kind of hit a reversal towards the later part of the day, gapping us open here today. Not a whole lot was happening, just kind of hanging around. But towards the later part of the trading day, we did, from an intraday, looking at the 15-minute chart here, from the intraday perspective, did break out of our previous swing high, started to show a little bit of bullish sentiment on the shorter term time frame, and we saw that in the Dow and the NASDAQ to a lesser extent as well. This is a 15-minute chart, right? So let's not get crazy by any means, but from an aggressive point of view, this is the first buying signal that we've seen here post yesterday's selling. So higher highs, higher lows developed. From the bearish side, we've got that nice upward trend on the intraday that has developed. If that trend were to give out, I would expect to see at least a little bit more selling if that trend can continue. And welcome out, Cody. Good to see you, buddy. Hope you're doing well. Hope the market's treating you nice. Nice boring day, right? After yesterday's madness. There's not a lot, on the S&P, and because of the nature of the gap, we really don't have any technical stuff in our way until around 2900 on the S&P, and that's just kind of the gap down point. Really, not a lot of real resistance until we get into the 2910, 2915 range. So there is room for a little bit of a rally to continue if the bulls are there. There wasn't a lot of I got to get in here today from a broad market perspective. I understand. I certainly wasn't feeling that way by any stretch of the imagination. We can also look at the tops of today kind of as that continuation if we're thinking bull. But remember, we are coming out of quite a bit of selling. And hey there, Amy, good to see you, buddy. Hope you're doing well. So we'd have a little break that we could look at if we wanted to try to fill this space. If I'm looking at this from a bearish point of view, probably at least want to see this intraday trend give out before I get too crazy. If I'm bearish, I probably wouldn't mind a little bit more of a retracement, quite honestly. Over on the daily chart, just a green inside candle. We're below lots, right? This is going to be a battle to come back. It may be a V-shaped recovery, and congratulations to anybody who buys in aggressively. If it is, for me, that's not going to be the stance that I take. I can certainly see, some buy the dip mentality coming in, and I want to see that personally. I want to see that wave of buyers come in. I want to see them take profits and the bears have an opportunity to sell, that's the swing that I'm looking for personally, not the upward swing. But that is just me. I can certainly see the argument for it. I do think we need to keep a close eye on that 29 to 29.15 range, where we do have, of course, intraday and of course or daily levels of resistance that we're going to have to contend with. Very similar over on the Dow. I mean, it's kind of rinse and repeat. Over on the Dow Jones, we were able to kind of establish a little bit of upward momentum. And on a positive note, we're seeing it, across our indexes. On a negative note, if it gives out on one, there's a very good chance it's giving out on all, right? So it's going to be an interesting thing to watch going forward. But we do have a little bit of room before we start to work into legitimate challenges. Anything, you guys know as well as I do, when the market's, on pins and needles, it doesn't take much, right? Just like when things are, flying up the charts, it doesn't take much. Right now, I don't believe it's going to take too much to scare the market, and definitely something I think we have to keep in mind with the trades that we're making going, as we kind of navigate through this this current iteration of the trade war. But certainly very, very similar to the S&P 500. NASDAQ, pretty darn similar as well. I want to come in on the 15-minute here, though, really quickly and kind of see where it is. You do have a lot of space, right? Again, a lot of space. If we can break through this, NASDAQ might even be the prettiest chart if we can kind of keep that momentum going, because we really don't have any resistance. Some of the stocks that were beat up the most yesterday were some of the stocks that had pretty good bounce backs here today, many of which were, of course, NASDAQ type of companies. So there is some room for the bulls on a retracement. That's how I will be treating it. I'm not looking at this as a sweet buying opportunity. I may very well be wrong in not doing so, but I'm looking at it as it's kind of a little bit of a retracement. There is some room, though, I can see where the bulls are coming from a risk to reward perspective and kind of the intraday development as we're going into tomorrow morning. Obviously, check the futures market. Good chance that can change things dramatically before we get going here tomorrow. Bounce back day on the rut, not quite the same type of patterns developing overall on the intraday on the rut, really just sideways. Probably a good thing for us condor traders. We wouldn't mind a rally back into the 1525, right, for our condor trades, I would imagine. The major support, we talked a lot about it yesterday, is going to be that 1460. For me, at least, that's kind of that major level of support, followed by 1460. But still, overall, within the trading range, much like the rest of the market, bouncing back pretty strong here today. On days like this, most of the sectors are going to look similar. We did see some really interesting movement on XLB here. It was started rough, and it was really starting to sell off while kind of the rest of the market was holding its gap. Energy and materials were really not getting on board with that whatsoever. We were able to kind of catch a little double bottom on the intraday, break some resistance, and start to show some upward momentum. So we actually had a pretty decent closing candlestick, in my mind at least, on this ETF at a known zone, right? At this 57 zone, we've seen, this area be a level of support before. Going to need some upward movement. Have a pretty clear level of resistance at 56 zone on the support side. Clear level of, in my mind at least, clear level of resistance at 57. Certainly not as strong as it has been, but we did see buyers come off of support. Again, much like pretty much everything broadly speaking in the market, I want this run up and I want some selling. That's what I need to see before I'm really comfortable, really one way or the other. Obviously, I'm kind of on the defensive right now, I think, like a lot of folks in the market, but that is what I need to see in the broad market and certainly in the material sector. Energy continues, in my opinion, to be the weakest sector out there. Let's take a look at some of these top holdings. Of course, you can see XLE hanging on by a thread, but hanging at that support level. Of course, this support level gives out. We really don't have a lot. There's a lot of potential room to the downside into the mid 53s before we catch our next level of support. You are seeing things like Exxon and Chevron kind of hanging up by a thread at support as well. Exxon there, Chevron kind of doing that same type of dance here on the 200-day moving average. ConocoPhillips continues to struggle. EOG continues to struggle on a breakdown. Oxy knocking on the door of support. A lot of selling here today over on Oxy. SLB, certainly I know quite a few traders that have SLB on their bearish breakdown watch list, testing a major level of support. Actually have a little bit of a reverse cup and handle pattern potentially developing here on SLB. Marathon, more selling, maybe not the ugliest chart, but certainly far in my mind away from a nice looking chart. Had a gap down on Phillips 66. I mean, so the list goes on and on. Just a ton of weakness across the board. At least that's what I'm seeing over in energy. Continues to be a place that, and I'm looking at it from a bearish point of view, not interested on the other side of it at this point. If we can get some follow through, close below, break the support level, you know, that'll just be yet another bearish signal for me over in energy. We had a nice bounce back day on the financials, but it's an area that we have to be overall careful with, particularly the banks. You did see a really nice upward move on CME here today, blasting through, closing through some resistance, little upward movement. I think you could call that a breakout. And those are the type of patterns I'm most interested in from the bullish perspective. I know there are plenty of bearish or bullish retracement candidates out there. And I know some of a lot of traders are looking at it from that point of view, but you guys know me, I don't like misbehaving pullbacks. I don't like things that pull back that deep. I'd much rather turn to breaks in this type of a market for right or wrongs. We did see some pretty nice movement in CME, but our banks, they're just kind of stuck, you know, in kind of limbo right now. You look at a JP Morgan, kind of in the middle, support way down here, resistance way up here, just kind of in the middle, much like the rest of the market, below moving averages and whatnot. Bank of America, same type of a deal. Citigroup, same type of a deal. So the banks are kind of in what I would consider no man's land, much like the overall ETF. If I were interested in any bank, it would probably be USB here, kind of hammering here at that old breakout point, lining up with the 50-day moving average as well. Ton of upward movement off of this recent break. Yeah, we're going to have to deal with these, you know, moving averages working against us, but risk to reward, just at a bird's eye glance at least, looks like it would be pretty decent. And hey there, Em, good to see you. Hope you are doing well. Hope the market is treating you nice. This is probably the only big bank, at least, that I follow that maybe could talk me into it. I like the price action here today. I do like the hammer candlestick. I like the overall strength before the selling. Certainly something I think is worth keeping an eye on, but for the most part, they are kind of stuck in the middle. So from a, you know, overall perspective, I do believe that we need to be cautious with financials right now. Really, broadly speaking, we're kind of stuck in the middle, much like the banks, between support and resistance. We do have that 200-day moving average acting as a little bit of a support catalyst, it looks like right now. So I'm okay on both sides, to be quite honest with you, in the financials. We're kind of in the middle. I don't think I'm going to love that sector probably for the rest of the week, but you never know what tomorrow will bring. Very similar development as far as kind of using that support, that 200-day moving average as support over in the industrials. You know, a little bit different layers, would have a little bit more room. I could see a stronger case technically to bet on this support zone holding. You know, really, if you kind of think about it, we are pretty sideways, right, on the industrial sector as a whole right now. There's going to be little things, including where we are. That was a resistance zone not too terribly long ago. We do have a good history of support and resistance, of course, in the 76.50 range. Could see an argument on the other side of things. This one is starting, you know, if we see some more downward movement, definitely looking like it might have an M potentially developing. Obviously, we haven't broke support yet, and that's getting ahead of ourselves, but something worth keeping an eye on. Certainly a very clear double top if we're looking at it from that point of view. Again, I think this is an area, things like CAT, things like Boeing, an area that can be, hit a little bit harder than some others with the trade war stuff. I'm much like Coach Mark, tend to shy away from those type of things when the trade war is back on, which is currently, of course, where we're at here. We did have a nice little bounce back day here on technology. Again, it's like everything else. It's got a lot of work to do, for me at least, before we can kind of move forward. You see an Apple, and it's fought back today, great, but it's still below its 200-day or 50-day moving average. Still wasn't able to recapture, the yesterday's high, that type of stuff. Semiconductors, again, they are very sensitive to the trade war stuff. I have them on a I'm not interested list personally. Of course, I'm a little bit on the wimpy side, and so I know that's not going to be everybody. Microsoft bouncing back. These charts have some work to do, in my opinion, before we can really get them back on strong bullish watch lists. But again, that is just me on the other side of it, kind of thinking about the other side, which I think is always healthy to think about the other perspective. This was a breakout point, right? This was a breakout point not all that long ago. So we do have some history here. We do have some upward potential. Don't have any, real strong resistance until, to almost to $80. Now we do have the falling 9 that's going to get here. We are below the 50-day moving average. Again, I need the first wave of buyers. I want to see it happen. I want the buyers to keep coming in tomorrow, and then I want to see the sellers step in, late week, and then go from there. I want that higher high, higher low on the daily time frame before I get back on board. On the support side of things, a little bit of upward movement. I do think, because of the history here, I do think we can look at yesterday's low as kind of support. If that gives out, my expectations are 72 is pretty easy to reach. So still very cautious from that perspective. Staples. Staples having see if I can actually hit Staples. There we go. Hanging around on that trend line, certainly have my interest. Again, they've got a little bit of work to do, broadly speaking, but in this general ballpark, like to see them kind of establish a floor, continue a little upward momentum. You know me, I'd like to recapture these shorter term moving averages, but I do overall feel that this is an area that, as we kind of get a little comfort zone in our new reality, right? As long as this lasts, will be an appealing area for the bulls, a little bit more of a defensive type of an area. Certainly risk to reward, the pullback, is certainly there. Betting on this trend holding, hey, if it gives out, we get out at 57, right? If it holds, wasn't but a week and a half ago, we were at $61. And so risk to reward, does make sense. We saw Coke yesterday kind of still sitting on its 50-day moving average as well. So stable is going to continue to be an area from a bullish perspective that does interest me. Still think we need a little bit of price development. And I think, for me at least, a lot of what this week is going to be is some new price development, barring breaks one way or another. And welcome out, Scott. Great to see you, sir. As always, hope you're doing well, my friend. Hopefully the market is treating you right. $59 is certainly treating XLU right. Briefly this morning, it looked like maybe, just maybe, 59 was going to give out on XLU. There's been such a strong zone of support, see if I can say that, but that was not the way it was going to go. Buyers continue to bet on that $59 zone holding and continue to be rewarded as for doing it. Just time and time again. Doesn't matter how it gets there, doesn't matter what's going on. Buyers just continue to come in off of that $59 zone. Again, an area that's going to be a little more appealing for bulls, I believe, because of the more defensive nature of it. We still have some room, right? We know the drill. 61 is certainly a resistance that we do have to respect in my mind. We do have these short-term moving averages, but again, when we're sideways, the moving averages don't tend to be as important, at least in my opinion. So while I'll respect them, I'm not overly concerned about them personally. Not going to be surprised if utilities continues to show a little bit of strength into that resistance level, but of course, resistance does need to give out to give us that next nice signal. Healthcare, nice little bounce back day here today. Not a lot to see, in my opinion, from a technical point of view. We do have this old resistance zone, which I think we can get rid of and just call it the 200-day moving average. It was a support zone. It was resistance. It was almost resistant. So we've got a little bit of history on there. We've got the falling moving averages. Overall, I think upward movement in healthcare should be treated with bearish retracement from a bearish retracement perspective, but there are certainly some stocks that are going to go against that grain. I'm still very open to both sides, bull or bear, as long as the individual component makes sense. But large, just broadly speaking, I think we're seeing more and more reasons to be bearish here on XLV, the healthcare sector as a whole right now. Discretionary, of course, just absolutely beaten very very tough yesterday day for XLY. Of course, makes a lot of sense. Just the same characters. I think this has been a pretty consistent area. The brick and mortar retail overall as a collective unit has struggled. The companies that have done well have continued to do well. Starbucks, I think, absolutely has my attention. I don't know about you guys, but a great gap up on at least in my estimation, a really good earnings report, pull back, started to see a little upward movement. I think you could make a case that a little upward movement tomorrow is enough to justify getting in, assuming risk to reward is there. Certainly it has my attention, and these will be the type of things that I will be looking at going into this sector right now. Of course, the brick and mortars have struggled tremendously. Still going to be some interesting bearish opportunities. McDonald's kind of doing an interesting thing. I don't know what we necessarily can do about it, but we have kind of started to put in together a little bit of a top on the intraday here as we're trying to fight with these moving averages. As you can kind of see here, got a pretty clear top, not a lot of resistance until those highs, which aren't very far away in all fairness, but I am kind of liking the way that is developing. I was really interested in McDonald's pullback. It's kind of, because of the last few days of trading, not as pretty as I would like it to be. I compare it to Starbucks, and for better or worse, I much prefer the way Starbucks works. If I'm trading something tomorrow, it's a chart that, from a bullish point of view on the pullback side, it's something that's looking like Starbucks and not something that's looking like Mickey D's, for better or worse. Just a little sideways. If we could continue this for a little while, play a little defense back and forth while the market figures out what it wants to do with itself, there might be something there. I'm still really interested in McDonald's from a bigger picture perspective. Just don't really feel like it is there here today. So it really is going to be a little bit more of the same, although now we're going to have to be looking at it from a more bearish perspective. I believe we've made lower highs and lower lows. We've broken down. We've given out the breakout point. Again, it's broad market, and so we will have to take that into account. But again, I think we have to be a little bit careful with anything that we're looking at bullish right now, at least until we get some simmering down. Another day hanging out in this triangle range. I'm really liking this. As you guys know, this is kind of what I wanted to see happen on the REITs. And well, at least for another day, I am getting it. So it continues to pinch in this symmetrical triangle. Eventually, we will break out. A break of either side is a signal. For me, though, a break to the downside is not a tradable signal. It is a bearish signal. I believe that is not a tradable signal, though, with the support zone there, of course, at 36.25. So just another day within this trading range. You did have PSA come out with an earnings beat and knocking on the door of a little bit of a breakout scenario. That definitely caught my eye. Old Public Storage, if you're looking for a read or two, there's certainly some interesting ones out there right now, especially if we break to the upside, assuming you're like me and looking at them from that perspective. Certainly some interesting characters, but really for our signal, I really do think we need to come out of this triangle to get that tradable signal. And over in XLC, we've got work to do. This isn't, on the actual ETFs chart, this is an important level of resistance. I would look for this to, if this is a stock, and we have to treat XLC a little different. I really believe that because of how weighted it is to Facebook and Google. But if this is just a stock, I'm looking at this and saying, we see a small body candle tomorrow, see some sort of turnaround on the intraday. This looks like a pretty bearish chart to me. It needs a doji. I would definitely say that, or some similar type of a candle. But I do think this old support zone, old resistance zone is a big deal on this chart. Now I'll take that with a little bit of a grain of salt, because of course Facebook and Google have such a massive weighting in this ETF, and so I'm not going to go too crazy there. Of course, Facebook holding some support, but it's got a lot of work to do, right? It's got a lot of work to do. Again, I think it could be a very interesting bearish retracement candidate a few days from now. Probably need a little bit of work. Bouncing off of yesterday's low, but nothing really to trade there. And of course, Google, who, arguably was an interesting bullish retracement candidate on Friday, and I believe that it was not my cup of tea, but I did believe it was an interesting candidate. It's got a little more work to do, but like we talked yesterday, we do have this trend line that has developed that the bulls can kind of hang their hat on if they are interested in it from the long perspective. Not my style by any stretch of the imagination, but certainly can respect that trend line. If I'm looking bearish, I'm probably realistically looking elsewhere. We had a big positive gap on earnings. There are plenty of bearish candidates out there. I don't feel like I have to settle for second best, if you will. We did have Take Two come out with earnings here as well. Had a little pop, little spinning top type of candle. Very difficult to do anything with that, but maybe something for the future. We also have my friends Activision Blizzard coming out with earnings here in a couple of days. In addition to their earnings, they're here at the end of the month, they will be launching what they're calling WoW Classic, which is the original World of Warcraft. Any of you gamers out there will know this, but World of Warcraft came out 15 years ago and has kind of been going ever since. Kind of been an evolving thing, and every new game is kind of an expansion of the old game, so it's changed dramatically, as you can imagine, over the years. Many of the older players prefer the old style of the game. I would count myself amongst them, and so there is a lot of excitement about the how that launch of that game is going to impact Activision Blizzard. Now, that's more something to kind of watch going into the future, but at its height, I mean, I don't know, again, you guys probably are not as dorky as me, so probably didn't spend so much time or waste so much time playing video games. But at the height, I mean, there was 10 million people playing Warcraft, right? They've, from at least without looking at their numbers, it looks to me, just someone who's played it on and off for years, they've lost lots of customers as they've kind of changed the direction of their design. A lot of customers like that. Some of us like the old one. So I'm very interested in seeing, we'll need a kind of a quarter of sub numbers, but that's definitely going to be on my radar for a watch list candidate with what I would expect a very nice spike in subs on the initial, at least, launch of that long awaited game. Very long awaited for a lot of people. So, but before we get there, we've got to get through earnings. It'll be a fun one to watch as well. So, overall, just a bounce back day, not a lot to see, starting to see some upward movement on the intraday. So from an aggressive perspective, unlike yesterday where we really didn't have really any bullish signals, on the intraday level, at least, we are starting to see some develop going into tomorrow. Do you think we have to be careful and respect the volatile nature of the market that we're in? I still believe that it's easier for it to drop than go up going into the immediate future. But right now we are seeing some bullish signals. I do think we can look at, any of those little short intraday trend lines that we're seeing on our broad markets, on our indexes. If these zones give out kind of that first sell signal, maybe that's not something I would want to take. Well, maybe my swing low gives out. That would be my next sell signal. Maybe that's not something I want to take. If the swing low gives out, that will be another signal. So we're going to have kind of the 1, 2, 3 trend support that we can look at as potential sell signals if this trend line does give out. As we move over into our commodities, for the most part, a little bit more of the same here today. Of course, VIX dropping down a little bit, buyer stepping in. But if you believe that volatility disappeared, that's your prerogative. I don't, and I'll certainly continue to act accordingly. I will expect it to continue to be volatile. A little bit of a bounce back day here on the dollar, a little bit of a deep retracement, probably needs some upward movement, but I think you could make a very interesting case as you look at the dollar index here that the price is in a very sensible location, upward trend. We did just break out here. Who knows what would have happened had trade war stuff not come back. It did. We'll never know that, but we broke out just last week. Certainly have to respect that as a bullish retracement, whether you're interested in it or not. That's a different story altogether, in my opinion. Need some upward movement for confirmation, but I can definitely see why some bulls might be interested in the dollar if this support or if this trend line is able to hold going into the next couple of trading days. Over in the metals, just another day of being good, good gold. 15 kind of probably that first level of resistance, even though it's not a huge technical resistance level, it is a big round number, right? And so probably best to expect some profit taking there. Really resistance to me at least isn't until, our real first level or next level resistance isn't until around 15, 20, 25 in my mind on gold. So same as always, it's a little extended right now. Maybe if I'm in it, maybe think about selling some calls, think about taking some profits, think about sticking around. Anything bullish makes sense in my opinion on gold right now. If I'm looking for a new trade, probably would prefer a little high base break or a little bit of a pullback, but same story in gold. I like it, and as long as it makes sense from a bullish point of view to me or to you, I'm comfortable with it, as really kind of been the MO with gold. Over on silver, still within this range, still really like the break to the upside, just going to have to be patient before we get an opportunity to see if it's going to play out that way, right? So another day within the trading range, a little bit of a bounce back day on natural gas. Talked a little bit about it yesterday. We do have some historic resistance or support, I'm sorry, at that $2 mark. Looking here at the monthly, you can kind of see we've been here before. It's going to take a lot more than that to get me to change my opinion on natural gas, but that is a support zone that maybe we can take, continue to keep them, watching as we're moving forward. Below 2, I would definitely call another sell signal. Right now, just a little bit of a bounce back day. We've got work to do, right? Even if we believe in $2 holding, that's all we really have to hang our hat on, right? We're below all of the moving averages on all the different time frames, anything, daily and beyond. So more work to do. As of right now, it's not there yet. And if you make me do anything, I would still say go bearish because, well, that's been what's working pretty easily in crude or natty gas as of late. And over in crude, working down, breaching that swing low on the intraday, kind of rallying up, closing right there. I'm going to call a break of today's low a signal to the bearish side. I expect a little more bearish movement. Of course, we've got lower highs and lower lows already. So we zoom out like this and hey, this is just a downward trend. We do have quite a bit of empty space between where we currently are and that support zone. I believe, some follow through, I do think we need to at the very least take out today's low tomorrow before we can even think about it if we're not already there. But I would call that another bearish signal. Overall continues to be bearish, at least in my mind. Everything kind of sitting on top of us. Was able to hold that support zone here today. Let's see if we're able to hold it tomorrow. It certainly looks like it might be interesting one way or the other. So that is where we find ourselves going into tomorrow. Again, kind of the type of day that we kind of needed, right? A little breather day for the market, see where it wants to go. Volatility is still there. Some interesting things that well, at least things I found that were interesting going into tomorrow. I kind of had to reevaluate my watch list that I put together over the weekend. Some are still very much in place. Some, well, their retracements are too deep. I'm not touching them, right or wrong. Had S back here, nice consolidation after popping on earnings in the one of the REITs. Nice little consolidation period post earnings. I thought that was an interesting looking chart. Of course, we looked at SLB. I think a very interesting potential cup and handle breakdown pattern personally. Netflix hanging by a thread at support with not a lot of support zones to prop us up in the foreseeable future, at least. There's just not a lot here. As you see on the weekly chart, there's a lot of little things that could, 270, 275 might be a place that we've seen some movement before, but certainly an interesting, after gapping down on earnings, interesting bearish breakdown candidate in my mind. DFS, big breakout, pop and nice little, well, an interesting pullback. Nice little, probably the wrong words to use to describe it, but most importantly, testing that old resistance as new support from just a pure risk to reward perspective. And that's all that this would be, betting on the breakout holding, right? This is very common type of pattern. But from a pure risk to reward perspective, we could kind of look at it from the point of view that, okay, well, we get in and the support level holds. Well, it was literally a week ago that we're at $93, right? If, I've got to put my stop loss somewhere below the breakout point if I'm making this trade, at least in my opinion. So risk to reward is going to be there. I would much rather again, you guys know me, at least most of you do. I would like you to buy it, run in, deal with these shorter term averages, put together a little bit of a 3-day ceiling or a little pullback higher low, then break that ceiling higher high. I think it needs some development, but I do like the price where it's at, on the chart. Do you think we need some development? Snap, good pop on earnings, pulling back, testing that old resistance as new support, kind of sitting right between those short-term moving averages. NOC, of course, bouncing off of that 20 yesterday, one of the few stocks that actually managed to make it through yesterday pretty unscathed. Nice pop here today, working into some resistance, working into an all-time all-time high here. Going to zoom out here. Actually, let's just go into this weekly chart here. So knocking on the door of a pretty, in my mind at least, major breakout potentially. Obviously, we haven't broke out of that yet, but I thought that was an interesting one here. CRN was not the right symbol. It was CERN. And breaking down, I believe these guys, one of our reports this week, broke the 50, little 2-day floor. Breaking that floor, I wouldn't want to bet on it. I wouldn't bet on it if it broke that floor. That is for sure. Plenty of energies. There's plenty of bearish breakdown candidates in energy if we want them. APA, just one of many. CME we looked at, and PSA, one of our REITs, knocking on the door of some resistance. So there's some really interesting candidates out there, both from a bull and a bear perspective. Now more than ever, believe it's important that we're trading what we're seeing, that we're position sizing appropriately, that we're not letting our, I think the market's going to rally, I think the market's going to drop more, get in our way and influence our decisions. If we're uncomfortable, there's nothing wrong with sitting it out, right? I don't have to make a swing trade tomorrow or this week or next week. There will be an opportunity, but I think as we're kind of working through this, I think we remain open to both bullish and bearish plays. I'm more prone to the breakout style, but I get the pullback style too. It's just not my personal favorite. There are plenty of interesting pullback candidates out there for us if we're interested. Plenty of bearish breakdown candidates out there as well. So I think we remain open to bull and bear plays. I think we continue to expect increased volatility that can impact how we're managing our trades, tighter stop losses, scaling out quickly, giving it more room, going way the heck out of the money on some out of the money credit spread so it can go back and forth and have that dance. It's an interesting market though. It really, really is. We'll see. The next move is the one that I'm most interested in. We'll see where this one takes us. So ladies and gentlemen, that is going to do it for the market recap for today. But certainly as always, guys, it is my pleasure and I do appreciate everybody's time. Thank you so much for joining me. Thank you for watching a little later. Those of you who do, always appreciate you guys as well. We've got the coaches show going on over at Tackle Trading this afternoon. So if you're a pro member, you're going to love that. I'm sure. If you're not a pro member, of course, you know the drill. We always invite you to head over to tackletrading.com, shoot us an email at team@tackletrading.com. Tell them Frank sent you. We'll get you hooked up with a free trial. You can come see what it is all about. I believe Coach Gino's going to be sitting in tomorrow on the Traders Lounge talking cheap spreads. That's going to be fun. I definitely try to get in there if you're a pro member as well. Of course, if you are new to the channel, we always invite you to subscribe, hit that notification bell, join us over on Instagram at Tackle Trading, on Twitter at Tackle Trading, and of course, you can find me at FrankMartin23 on Twitter if you are ever looking for me. And you guys are all very welcome. It is my pleasure. I appreciate everybody's time. You guys have a great Tuesday afternoon. Again, be ready for about anything, right? Market is sensitive right now. I still believe it won't take much to push it down a little bit further. But again, that is my opinion. Trade what you see. We're all entitled to our opinions, right? But we all got to trade what we see because at the end of the day, nobody but me cares about my opinion, at least not enough to matter. So, all right, guys, get the heck out of here. Have a great Tuesday afternoon. Enjoy the coaches show here tonight. We will see you same time and place here tomorrow. Thanks, everybody. Have a great night. Bye now.